On the surface, the answer seemed pretty obvious. The crash really kicked off right after this news broke about potential 100% tariffs on Chinese goods. And a headline like that, yeah, it's enough to spook any market. But here's the thing, that wasn't the real story, not even close.
Okay, let's really get into this, because this is where it gets fascinating. You have to separate the spark from the fire. That trade war news, that was just the spark. The fire itself had been building up for a long, long time.
And this slide just nails it, right? The news was the match. The real fuel for this inferno was something way more dangerous: excessive market leverage. Simply put, people were borrowing huge amounts of money to make even bigger bets. The entire system was basically a giant house of cards, just waiting for a slight breeze to knock it all down.
So yeah, let's focus on that fire. The leverage. For weeks, this wave of crazy optimism had traders borrowing heavily, making massive bets, and creating this really precarious situation. The market was completely overheated, and one of the biggest red flags was a little something called open interest.
And you know what's wild? People were screaming about this for weeks before the crash. You had analysts tweeting out that open interest, which is really just a fancy way of saying the total amount of borrowed money at stake, was at a dangerously high level. The exact same level, by the way, that we saw right before a previous 30% drop. The writing was literally on the wall. The system was primed for a fall.